Mauricio Cabrera, and welcome to the Kudlow Report. Larry Kudlow has the night off, but don't you worry, even in Larry's absence, we still believe free market capitalism is the best path through prosperity. So on tonight's show, it's more than a summer rally. Larry says it's a new bull market. U.S. markets hitting the highest levels of 2009, with the Dow turning in the best July in 20 years, 12 years for the S&P and the NASDAQ. The bears continue to get slammed, and it's the new bull market. But how long does it last? Is it too late to get in on the recovery rally? Let's dive in with our market gurus. We have CNBC contributors Jerry Boyer, Don Luskin, and Steve Grasso, plus Peter Schiff, author of The Little Book of Bull Moves in Bear Markets, and Peter Marisi, University of Maryland business professor. And Peter, I'm going to start with you. It says here that you're bullish. Is that because we've once again gotten data that indicate to many the recession has ended?
Well, the recession
hasn't ended. If anything, the depression is just getting underway.
I was talking to Peter Marisi, sweetie.
Oh, I'm sorry.
Well, the two Peters have opposite views. I think the recession is coming to an end. The fourth quarter is going to be a good quarter, and we got a lot more room to grow in this market.
The other Peter.
Well, you know, first of all, it's not a new bull market. It's the same bear market that's been going on since 2000. But, you know, what's happening in the U.S. is a sideshow. The main event is overseas. The markets are on fire there, particularly in Asia. I mean, the U.S. market looks like it's standing still.
Why are you skeptical of this?
Well, look, I know that the underlying fundamentals of our economy have worsened. They haven't improved. We have more debt now than when the recession began.
So the GDP coming off only 1% compared to the two previous quarters that were even more horrendous. The fact that continuing claims peaked how many months ago? None of that is good enough for you.
But at what cost? Look at how much debt we had to incur to get that quarter. We're going to pay for this. It's going to come back and bite us.
Hold on. One of the big things going on here is that American companies have trimmed themselves down, gotten much more efficient. Yes, there's a big market in Asia, and they're going to make money there.
Look at that inventory number.
Yeah, but the U.S. government is not trimming itself down.
Yeah, but the U.S. government has hardly spent very much so far. We haven't had much stimulus. It's going to be American companies selling abroad.
Well, they're issuing all this debt. What are they doing with the money? Meanwhile, there's a lot of companies that are getting propped up with bailout money. We'd be much better off to let them fail and free up that capital.
You're on the floor every day. What are your clients doing when it comes to fund flows? Do you see the money? Do you feel that this is still a bullish market?
I feel like my clients were skeptical 100 points ago in the S&P. Now they're getting more bullish, and that money has to come in off the sidelines. They're getting pressured around that 1,000 level in the S&P.
Don Luskin.
Look, I hate to disagree with my new best friend forever, Peter Schiff, but, you know, this is not like the same old bear market since 2000. This is the same old trading range since 2000. This feels very much to me like the Johnson-Nixon years, where for 16 years from about 66 to 82 until Ronald Reagan came in and cleaned things up, we were in a trading range for 16 years in the Dow, and it was a lot worse than a trading range. It was a bear market if you adjusted it for inflation. So it turns out that we've now been for a long time in the Bush-Obama years. We just didn't know it until we were 9 years in. You look back, nothing's happened with stocks. Inflation is back on the rise. But that doesn't mean you can't have lots of bull markets and lots of bear markets. It's a gigantic trading range. So let's get our definitions straight.
Sure, but meanwhile, as the dollar loses value, you know, we hit a new low for the year on the dollar. You know, the real value of U.S. stocks is going down.
Not on a trade basis. Versus what currency? That's just not true, Peter.
Well, no, the dollar got clobbered against every currency today. But if you look at the dollar index,
but that doesn't mean it made a new low.
Yeah,
it just didn't. It just didn't. On a trade-weighted basis, the dollar is what? 10% off its lows?
It's a new low for the year. The dollar is headed lower.
For Peter, only if Ron Paul is president do we get to declare it a bull market. Otherwise, unless we're on the gold standard and all that other stuff, then every bull market will be a loser.
I mean, I love Ron Paul as much as the next guy, but we can't define bull market that way.
No perfect
Jerry Boyer,
exchange rate.
finish your thought.
All right, the Dow Jones went up because profits have improved. Profits have improved because American business is smart and they cut their costs. And that was in the midst of an extremely deep recession. Now, off of the baseline of those incredibly low inventory adjustments, we're very likely to get positive GDP in the third and fourth quarter. So now the top line goes up. So that is almost a guaranteed recipe for increased profits. It's not a boom, but it's a bull, and it's real.
And, Jerry, the only problem is that we're seeing on the floor is that we can trade to the higher end of the trading range, but the problem is once all these anti-growth policies come through, what happens to profits then? What happens to the tax plan?
That's for real.
And what happens when interest rates start to go up, which is going to happen?
Congress is out for a blessed month.
Right, that's
very bullish. And then we've all had time to read the bad legislation, so we have a better chance to stop them when they come back.
But do I have a sense all five of you seem to think that if we see many of these social policies enacted, Healthcare reform being, I assume, the biggest one, that would kill any long-term rally.
Cap and trade.
It will slaughter the bull.
Cap and trade, Peter Schiff, all the spending.
Well, obviously that's going to make a bad situation worse, but we're even further out on the leverage limb than we were a year ago.
What is this debt obsession?
And rates are going to go up. They can't stay down.
The debt is the only measure of how we're doing.
The Fed has parked a lot of bonds on the books of the banks, and they're sitting on them. Let's not say we're all leveraged out. It isn't like, you know, the consumers haven't been working down their debt and all the rest of that.
They've gotten started, but they're nowhere near in good shape. We've been on a spending binge for a generation.
So how long does it take for the consumer to get back to where it was?
You think people aren't going to spend money for a generation? Come on.
No, we've got to save money. We've got to get our savings rate up to 10 to 20% and keep it there for a long time.
But Peter Schiff, how long is it going to take?
Did you happen to look? Did you look at the GDP data that was released this morning? There was an amazing thing which I want to throw out as a challenge to you. Do you realize that the consumption share of GDP
went up,
hit all-time highs this last quarter? What that means is that this theory that the consumer is just completely falling off a cliff and will never come back, and we're going to be in 25 years of scrimp and save, has simply not shown up one iota in the numbers.
So it's an interesting theory.
As scientists, it's not in
we're digging
the
ourselves
data.
into a deeper hole. This is going to come to an end. You can't run an economy on spending other people's money. You run an economy on savings and production. We've got it completely backwards, and that's why we're in trouble.
And we're saving.
But we're not spending it. We're not spending other people's money. We're investing other people's money.
Let's make this
Where do you think we're
actionable.
getting this money?
Jerry Boyer, what do you do right here based on what you believe about the market?
Well, if you're not in, you might want to wait for the next little correction before you get in, but I think we've got another little bull coming. And if you want to know where, I like technology because it's going to be a jobless recovery. Peter will get his inflation down the road, so you might want to start to get ready for that.
Peter Schiff?
Well, look, you can't be in cash and you can't be in bonds, so you got to own stocks. I just own stocks abroad. I mean, I think you got to be in Asia, you got to be in China, Hong Kong, Singapore.
Oh yeah, China.
You got to be in natural resources.
Peter, if America falls off the cliff, who's going to buy all of China's little lead paint toys?
Silver up 50 cents, gold was up $20. I mean, that's where you got to go.
Yeah, Russia and China, very stable. Great place to put your money.
How about
who's China going to sell their exports to, Peter? Peter, who is China going to sell their exports to?
They're going to buy them themselves. They're going to buy them themselves.
Don Luskin.
I want to know, what is the China story if the U.S. isn't there to be a customer? The idea that all of a sudden the Chinese are going to turn into a consumer society is just simply wishful thinking. There's not the slightest bit of evidence for it. It's an idea, it's a theory, it's interesting, it's a great narrative, but where's the data?
They can buy their own stuff. There's a billion Chinese. As long as their government stops buying our bonds and stops suppressing their own currency, you're going to unleash massive purchasing power in China.
That's a big if.
It's not an if. It's a when. It's coming.
They're not going to do that. That's not in their own interest.
It is in their interest.
They've been buying massive amounts of bonds over the last 12 months and have had their exchange rate absolutely fixed against the dollar. And that's why once they stop buying those bonds and let the dollar fall in value against the yuan, we'll export a lot more to China, and they will sell a lot more in China.
What are we going to export? We don't have anything to export. They're going to export less to us, and they're going to consume their products themselves.
The most popular car in China are Buicks, but they won't let us make them there.
China is not El Dorado.
Don Luskin, what should people be buying or selling here?
Good Lord. I think the one place where it all comes together, where I think we could actually all agree, is I think on a global basis you should be buying natural resource stocks.
True.
Because no matter what happens, because the United States, we know for sure that we've got inflation in our future, right? I think we can all agree on that. So that's going to be good for natural resource stocks.
In our present,
we know that China is going to keep growing. It's not going to go into a depression. Whether or not it's El Dorado is another question. That's going to put pressure on resources. So the one thing that you know is going to work are resource stocks anywhere in the world.
Grasso, any ideas here?
Healthcare. I think most mutual funds are underinvested in healthcare, and as long as the Obama plan continues to be watered down, healthcare is going to be running into the year end.
But that's a big if, right? It's a big risk.
The more I hear talk coming out of Nancy Pelosi, I don't think it's going to be as watered down as we all hope on this panel, or 90% of us on this panel hope that it continues to be watered down the way it is. So it's a big if.
Well, we got to the August 1st hard deadline, and they missed it.
That's right. And if not, energy is where you want to be as well. It's not going anywhere. The alternatives aren't feasible at this point. And they're very subsidy based. So I would think that energy and healthcare, you could probably make a bet going to year end.
Peter Marisi, you get the last word. Any good ideas for investors?
Beyond commodities and healthcare, technology. We're going to be investing a lot in technology over the next 2 years. I think those stocks will do very well.
All righty. Good discussion, guys. Thank you, Peter Marisi. We're letting you go. Everyone else is sticking around. So coming up, banks